Well, still with the markets, and global markets, of course, are still focused on the problems in Europe. But it was Australia, it seems, which grabbed the attention of traders in the Northern Hemisphere when they arrived at work this evening. To tell us more, I'm joined from London by Mike Ingram at BGC Partners. Welcome to the program, Mike.
Good evening, Andrew.
Well, you and your colleagues in the trading world have been taking a close look at Australia's latest employment figures. What are you seeing?
Well, I think it really fits into the picture of an idea which is increasingly grabbing the imagination of people over in Europe, which is really of a sort of a coordinated global slowdown. I think one of the things that brought that very sharply into focus last week was the surprise rate cut out of China. It was clear from the macro numbers that were coming through that there was probably more stimulus coming, but the timing and the magnitude of it was higher. Then we've had the unexpected rate cut out of Korea, and now this job number out from Australia. So yes, it all fits in with the story, I would say.
It seems like people in the Northern Hemisphere are more excited about the numbers than we are, because last month we had an unexpectedly big increase in jobs created, and this month we've had a slight increase in jobs lost.
I actually think to some extent it's a sign of desperation, because we've almost, I think, given up on finding sources of growth domestically. So we'd like to think that there are other parts of the world that are still growing and maybe might afford a better export market. Though, and every once in a while we have this sort of decoupling theory which gets recycled through. I think the last time I saw this was the back end of 2007, and that's the kind of frame of mind that we're in right now.
Well, to the place where there really are problems, and in Spain at the moment there's been a very strong reaction to the government's latest austerity measures. Did the Prime Minister really have a choice there?
No, we know that the banks need an awful lot of cash. We know that Spain has trouble raising cash in the market. We can see, where bond yields are. They are a little bit off the 7% mark now. They're closer to 6.5%. But yeah, they really needed external help, and quite frankly, the creditor nations led by Germany have got them over a barrel. And that's the extent to which they're having to knuckle down, shall we say, is becoming even more apparent now that we know what the terms of the Spanish bank bailout actually are, and they're pretty onerous.
I see the head of the OECD has had a real go at financial markets today, Angel Gurria, saying we don't have a system that supports or rewards virtue, good policies, and that actually protects countries that are going to do the right things and that are being attacked by markets because they're seen as vulnerable. He was referring to the unsustainable interest rates being forced on Italy and Spain at the moment. Is he right?
Yeah, he's entirely right. But I suppose the issue is how do we solve it? And unless you're going to start to introduce capital controls and so forth, then unfortunately, the sovereign bond markets, etc., are at the mercy of where people perceive risk to be. And of course, as we found out, it becomes a bit of a vicious circle because, of course, higher funding rates in the periphery in Europe are actually forcing to the point where they actually become insolvent.
Well, Mike Ingram, it seems we're going to be talking about this for a long time to come. Thank you very much for your time tonight.
My pleasure.